Okay. All right, everybody. I hope everybody's tuned in, and I'm Louis Borsellino. This is Anthony Borsellino. All right, this is my brother's son. Much better looking than my brother was ever. But unfortunately, as you can tell, I haven't aged much. For the people who do know me, and you see me on the site, I actually look pretty good. All right. So we're going to start sharing the screen, and we're going to go live with sharing the screen now. Okay, and there we go. All right, so what I have up on here is our 5-minute chart. This is the 5-minute chart so let's get things straight until I get better at this. When we do live broadcast and we're sharing screens, if you need to ask a question, put it on Twitter. Anthony will be monitoring Twitter. You can either direct message us, or you can absolutely just post it on Twitter, and I'll ask you a couple questions. So what we've got up here is sort of what you see in the morning when I do our charts. We're looking at a 5-minute bar chart, and then this is the profile, which is a 30-minute chart. Okay, so we now went up and we've made new highs. All right, and we finally took out the 5-minute pivot. As you can see, I'm going to make this chart bigger. All right, been very slow, kind of a slow grind. As you can see, this is our 5-minute chart with the top of value here, and now we've got the 3 dots where we went from a sell. Here you can tell, here's the bar where we took out the 5-minute pivot. So when you see me tweet to you, this is what you're seeing and hearing that I'm watching and monitoring. Now, so now the Dow, I'm going to bring down another chart. Here's the Dow. Okay, well, let me open it. So the Dow just took out its 5-minute. Actually, the Dow took it out a little bit ago, right here. So the Dow is now in the buy. So the only, as far as I'm concerned, the only one that is not in a buy is the Nasdaq. So the Nasdaq has not taken out its 5-minute pivot. Excuse me, guys. I'm just trying to. All right. I'll bring the Nasdaq in a second. So as you know, I like this. I like when all these screens or all these pivots are lined up. And this morning, they were lined up. Okay, so here's the Nasdaq. We need the Nasdaq to take out. It looks like 48.85, and then it will take out its 5-minute pivot. I did this at 12 o'clock because I wanted to be able to field questions, talk to you about what I'm looking at, and so on. So go back to the screen share. Now here's the profile. Okay, so you're kind of looking at mostly my basic tools that I use every day. Now this morning, when I opened up the profile, you see this gray, all this gray matter in here. To me, that's telling me the market had to fill in back up by the gray. Okay, and so we opened up and we ended up going, moving down, and we actually, this is the low of value, is our low of the day, all right? And we had an up bias today, and then we came in, and you can see we spent a lot of time between 92.25 and 88.75, thus filling in this gray matter, all right? So when I look at things like this, the chart is absolutely kind of filling in. We got a very small range today. Here's one, and the nice thing about this Inside Edge software is that the Inside Edge software will absolutely paint in. You don't have to figure it out. There's 1.5 times the IB range, 20.95 half. All right, 2 times the range will be up here at 20.98 half. Okay, so bracket I is opened up, and as you can see, we're actually still moving up. Now we had an up bias, and we were looking for, on our up bias, we were looking for a 10-point move from the low of the 5-minute range. So this is actually what we were looking for, 20.96, which I think we put out on Twitter. So I don't know what to tell you at this point, because I don't, everybody likes bull markets. Well, I don't like them. I like bull markets, but the long-term people are in control. There's nothing for us to do except to sit back, and they're in control. And you know, the market's at all-time highs. If you take a look here, when I tell you about an ugly high, this is an ugly high. See how it's not finished? This TX here and this TF, they're not finished. So that's when I talk about ugly highs. Let's take a look at, I think this is going to be the SPX. There we go. So this is our cash chart on the cash. Looking for us, we need a close above 2107.40, and this day pivot will be charged, will go to a buy, which went to a sell back on December 12th. So if you see right here, it went back into a sell. So you know, I'm just sitting here, and you know, I'm actually got my windows open, and if I start trading again, I'm flat. I got out of my long positions, and I'm sitting here flat. And if there's any questions, let's just answer them out on Twitter. So I'm looking at the NASDAQ. Like I said, the NASDAQ is the only one that hasn't taken it out. It just looks like we're getting that slow grind up. And that's it. We're actually reaching, I think this may be S1. Let me bring this chart in. There we go. R1. So R1 is at 2096.5. All right, and we just actually touched it. Now the R1 is calculated. That's calculated, you know, off the floor pivot, and the floor pivot, as you know, is basically the high-low, previous day high-low, the high-low 3, and then you get your pivot, and then you calculate your resistance points from the pivot. So if there's any questions, things you want to talk about, you know, let's get them out on Twitter. We're, you know, sharing the screen with you. I think that the way we're working this out is that sometime in the near future, we're going to be able to have enough bandwidth to actually do a screen share all day long. That's what we're looking at at this point right now. Let's see, what some other charts I can share with you. I closed down a lot of charts because I wanted to make sure we didn't have a problem with bandwidth and so on. Here's a chart that I use a lot. So here is the ADS. So this is actually the cash for the S&P. All right, and we put it on a 1-minute basis. As you can see, it's been basically just stepping up all the way up for the day. You get these little pullbacks, and then it goes back up, and so on. So this is, you can get this. It's a $ADSPDC. This is the cash S&P. So I keep this up also, and I look at it today. You know, look at it as the market's progressing and going forward. So if there's any questions, anything people want me to talk about, we're sharing the screen live, and we're actually looking into the fact that we could probably do this every day for a couple hours. You know, we'll do it at a busy time at the opening, or we could do it, you know, at other times. So my screens, I've got 4 monitors. I use primarily the profile. Okay, and then I use the 5-minute chart, and then I give the ability to go back and forth and toggle. I keep the 15-minute chart up. I also look at the I keep the Dow, the Russell, and NASDAQ up on a 5-minute basis also as I'm trading. So these are this is, you know, we talked about sharing the screen and looking at our things, and you know, I wanted to get the right venue to do it, and you know, unfortunately, the market itself has been very slow, and this is what happens when you get into these bull markets and we get these steady grind high. It's hard to generate interest up here, but we know that if we talked about it in the, you know, over the last month or two, about the long-term trends. Here's the day chart that we I've been looking at for months now, or at least a month and a half, showing that we've made new all-time highs in the, this is a day chart, all-time highs in the futures, but we still haven't made all-time highs in the cash, which is probably why we're moving so slow at this point. And that's about it. I mean, is there anybody else out there? Any questions? All right. All right. You guys like it? It's awesome. Perfect. I could keep talking. I could talk to you about my life. I could talk about the markets. I could talk to you about all kinds of things. But now, so take a look at the way this is filling in. So when I see this, typically, you know, these are like trend day moves, and I'm looking at I here. I don't really, I think that we're going to get some sort of pullback unless we can get the NASDAQ to join in here. You know, the NASDAQ is still kind of sitting back there, and I'll pull it down in here. Here's the NASDAQ. All right.
Got a question.
Okay, read it off, man. What's the question?
He's thanking you for sharing your screens.
Okay.
And he said you missed some profits with a question mark. Any expectations for chart profit base for a profitable top?
Okay, so yes, I did miss some profits. I got out because we had we have a sort of a system that generates in the morning, and so when you see this long bias here, it generates and has a 10-point handle, right? So usually when I have multiple contracts on or more than I should have on, I basically I like to have what we call a couple runners. But right here's where I think the next profit is 20.9865, which would be 2 times the IB range. Now the problem is that we've had such a small range, right? And when you take a look at I can split this chart right here. So when we look here at B and C, we just had a very small range. I mean, we basically had a 92.5 to 86.25. I mean, we didn't even have a 10-point range in the first hour. So that's the problem. Now, for me, if I'm long, I want to stay long, but I think this market will probably fill back in this area. See where I started? With the possibility of going back to 2091, all right? Here's the other thing. I'm going to open this up for you. So this is my channel today. Just happens to be at the top of value, but this blue line right here, that blue line and this blue line is my channel. If we come back and we trade underneath this area here, which is 2091.5, basically, if we go underneath this, I think then we'll test the bottom part of the value area range. So that's why I draw this channel based on, I kind of look at what happens in the first hour, and then I try to adjust my stuff from there. I mean, I draw my channel after the first hour. And then here is the point of control. And I tell you what, you got to understand that where I came from, where I came from was, I was always intrigued with technical analysis. And the way I was intrigued with technical analysis was the fact that when I was a young order filler, I started out in the gold. And this is back in 1982. I was filling orders. I was fortunate enough to be involved with a gentleman named Maury Kravitz, who at one time had every single piece of business on the Chicago mercantile floor for filling all the paper. And it's a funny story how that happened. He ended up getting that contract because before, I believe it was Nixon made it okay to trade gold, Maury went around on the floor of the exchange and basically said, if they start trading gold ever again, I think you could own gold again. Can I have your gold? We have a gold contract. Can I have the your business? It's sort of like if you went around now and said we're going to give you rides to Mars and they're going to be free, right? And he asked people for something that they thought would never happen. And so, funny enough, they started trading gold, and the New York the Chicago Mercantile Exchange was the biggest gold contract before COMEX got started, and he had all the business. In fact, the Merc actually broke him up and said he had to share his business with other people. Fortunately, I was a young clerk. and he made me his assistant. So I started trading gold. But what intrigued me was the fact that I would have orders, and when we had a deck, what we did was we had all these papers. Before there was electronic arbitrage or anything, basically the orders were written on a piece of paper, brought into the pit, and we would assemble the orders with the buys in descending order and the sell stops, and then we would turn it sideways, and we would assemble the orders. Basically, let me give me a piece of paper. While we're slow, I guess we can go through this. All right, and I'll go back to stop sharing. All right. Hopefully that puts my fit. Yeah.
Click stop.
There we go. All right. All right, so everybody can see me. So the orders would come into the pit like this, okay? And they would have the buys and the sells, buys and the sell stops, because sell stops have to be below the market. And then I would take the deck like this, fold it in half, take a pen, and if it was a sell, I would write the amount sell to at 12.35 and 50 cents. And then we would just take the order on the deck, and then we would just put the sells and the buy stops on the back. So as the market moved up, we were filling orders, peeling them off the back. As the market moved down, we would open up the deck and we would fill it like that, right? So that's how this whole idea of electronic book, and before there was electronic arbitrage and so on. So when I was filling these orders and I had this book, I was filling for 25 different brokerage firms. They would come in, and all of a sudden I would see like 200 contracts at a price, and then I'd see buy stops at a price, and I would see different things at a price. So early in my career, I got involved in the fact that I wanted to know about technical analysis, and about the mid 1980s, myself, Jack Sander, who was the chairman of the exchange, Les Rosenthal from Rosenthal Collins, and Bob Collins, we bought all the original rights to Gann, W.D. Gann. If you're not familiar with Gann, he was probably the father of technical analysis, and the technical analysis that he started back in the 20s. He would get like $5,000 a week to do a seminar on technical analysis. So I got about early in my career, I realized that technical analysis for what we do is exactly where we had to go. So as I moved on and progressed in my career, I didn't really I didn't care about. I was one of the few guys that when I did my research, I had some technicians working for me. I would go in the pit, and then I would look for the order flow, sort of to reinforce where we wanted to buy, reinforce where we wanted to sell, and that's how that's how I use the order flow on the pit. So this transition to the screen for me has been, it's been slower than I like, but because you have to kind of be able to find a way to replace the emotion that's on the floor. So let me go back to sharing the screen, because it looks like we're trying to make new highs here. Okay, so here's 2 times the IB range up there. Okay, would be 20, so it's going to be 20,098 half will be, I think that, and so when I look at profile and I take a look at this, it's funny when profile starts moving in a direction. So bracket I came out and started down here, okay? So that was at basically at 12 o'clock, right? Usually it will move the same direction for about 15 minutes, and then I look for a pullback. Then I start looking for a pullback, all right? So at this point, since we're at all-time highs, you were asking me for profit objectives. Based on how slow the market is, I'm thinking that this would be great if we got to 20,098 half. So, are there any other questions? Yeah, go ahead.
Okay. We said, can you talk about your entries and exits and your money management? How you manage your money?
Okay. All right. So when I told you we have this, we had an up bias today. So our money management. Let's talk about our entry. Okay. So when we put out our bias today, what I try to do, all right, and this is actually a great chart to take a look at what's going on. In fact, I was talking with my nephew today, and I said, look here, see, watch the way this market's moved. Hopefully this is big enough and you can see this. Okay. All right. So let's look at from 8:30. Okay. 8:30 on. That's 9 o'clock. Okay. 8:30. All right. So the market opened here. We had two lower closes. We went out to the bottom of value. We couldn't take out the bottom of value, right? See this exhaustion candle? So this exhaustion candles for me was meaning that, you know, this could be a turnaround than what was going on. So we were getting a sell-off. We had the bottom here, okay? Now, so this is the CCI that we talk about that Pat's kind of developed and put it on steroids. So going into the morning, as you can see right here, we had like a negative, see the red line here? Okay? I've got a negative bias, I got a negative CCI with this moving down, okay? But I've got a positive bias, so I'm looking to buy the market from anywhere from 200 points below the opening range, okay? Below the opening range, and looking to add to my position from there, all right? So my first buy today was at 87, okay? So then that initiated my first buy. Then I look for what's going on as this market moves up. Now, as you can see, the market moved up, it turned to gray, okay? See here down here where it turns to gray? I'll open this up. Hopefully everybody's following me. I'll open this, expand this, all right? And now we got back above our point of control, all right? So right now, I've got a bullish bias. I'm back above the point of control, which is the most volume we traded on Monday, I would believe. And I've got the bottom of value. So right now I'm thinking, okay, I got a long position. I'm stopping myself out if we get up, if we go below here, if we go back below here, all right? But this is exactly the kind of things I like to see right here, okay? We had 1, 2, 3, 4, 5, 6 higher closes. We tested the top of value, right? We went back here, all right? Got another exhaustion dot. I like, you know, and this is I'm not going to take credit for all this. This is actually something that Tab had taught me, like, you know, because he's been screen-based his whole life. So then we got an exhaustion dot. We didn't get two lower closes, but we're looking for lower closes that don't take out key support areas, right? So we went back up, we tested this again. We got 1, 2, 3, 4 lower closes, but we couldn't take out the point of control, right? Right here, for me, was another point to add to our position, okay? And the other thing is with the up bias and everything being in a sell today, because of the up bias and things under the sell, meaning the pivots that we've developed, that the pivots ended up becoming, for us, ended up becoming what we call targets. So this ended up being a target. So now we broke out. Another like here, right here. Exhaust 1, 2, 3 higher close, 2 lower closes. Can't take out the top of value. We go up again, take out this. 1 lower close here, and we've been going up ever since. So these are the kind of things you want to add to positions and so on when you're taking a look at these lower closes. Now, I think the other thing that we have going on today is, or that I think people forget about, is when I talk about the average rotation, right? So it's pretty obvious that we have a 5-minute rotation. So if I go down here and I put in the low, right? So the low of the day is what, 86 and a quarter. So I go 20, 86 and a quarter. You can't see it. I got my little calculator on here, and then I add plus 1,500 points. All right. So I got a projected high of 3 rotations. These rotations like to have, they go basically 3 rotations, meaning 3 5-minute rotations. So that would have been my projected high at 87, right? So I would have looked at, so I had a projected high from our bias at 86 and a projected high at 87.5. And now we're, where are we at? 80, I'm sorry, that would have been 97.5, right? 1,500 points. I added the wrong numbers up. So I'm looking for average rotation from the bottom of 500 points. 500 points. So I want 1.5s or 1,500 points from the low of the day would have been what I've been looking for at the top up here. So, right. So 92, 97.25 would have been what we've been looking for when you go and look at that, the high day where we're at. So we went 2 times the range. The high is 98. So, that's where we're at. It's kind of hard when you get this slow, grinding by, and then here's what happens. And I'm going to tell you something, everybody. 30 years I've been doing this. I do it too. Impulse trades, right? Now, I'm going to tell you another thing. You see this red line here and these yellow dots? This is another thing that we've developed. Okay? So this dotted line here is a dynamic VWAP. A dynamic VWAP. And we've done a lot of studies, and so this is basically 2 standard deviations from the VWAP, and this is an exhaustion point. When I see this up here, in all good consciousness, I cannot enter a long position because it looks like it's going to get to the exhaustion point. All right? And so those are another things that we look at. I mean, this is kind of perfect for our live event because the markets are moving kind of slow and we don't have anything to look at. Now here's our, we don't have to worry about things flying around. So now we've got, and so I was talking about entry. If you take a look here also, I keep jumping around. So we had one lower close, it kind of reached the top, it crossed. This is what we call the center point, that pink line. It crossed over the pink line, kind of got to the top, went back below. Here's where we get this right here. We bottom out, can't take this. We get back above the pink line again, and then everything, here's a solid green. You see this here? Solid green on the bottom. All right. Okay, our moving averages here have crossed, solid green, and now they're all in ascending order. See how these are ascending? This being the slower moving average up here, and this being the faster moving average here. Now, you can't ask me which one these are because this is sort of a combination of a lot of them. All right, so Pat is kind of, we've kind of made our own CCI, and it's on steroids as far as you're concerned at this point. So we've kind of reached these exhaustion areas. Of course, I'd like to see a pullback. I'd like to see a pullback, but when you see things like this, it'll leave single prints and so on. So, any other questions out there?
Yeah, we got another question here.
All right, go ahead.
Can you explain the IB range? How the value areas are calculated? Is it a custom study? I would like to add it to my charts.
Value area. Okay. All right. IB range is real simple. I gave it to you right here. Okay. So the market opens in bracket B. Okay. IB range is basically the high and low of the first hour. So if you see here, C was contained inside B. That doesn't usually happen. Okay. So that's how you calculate the high and low of the IB range. Okay. Let's go. Let me pick another day. Let me see here if that will be more helpful. Let's go to here. All right, let's take a look at this IB range. Same thing, was contained in the same, we'll probably have to go back a little further. I'm sorry, I gotta go here. So now bracket J is opened up. I'd be looking for bracket J to be moving back towards this way to fill in for what's happened. Well, it's been so slow. I can't find an IB range here that's been more than where the high and low wasn't set in bracket B. So, well, actually, this wasn't. Take a look today. C was the high of the first hour up here at 2092 and a quarter, and B had made the low. So it's the first hour of trading. That's what you call the IB range. Now, value area. Okay, let's go back to here. Value area, and let me go back and reset these charts. These are nice things you can do with these charts. Do the reset the splits. I'll go back in here. Just get us for today. All right. So this is last night's overnight action. And then let's make this bigger. All right. So this is right here is the overnight. Okay. This was yesterday's shortened session. So the value area, 2087. You see right here what I'm pointing to? Okay. The blue up to the red, that's the high, 2092. This is where some people use 65, somebody use 70. It's where 70% of the previous day's trading took place. That's what they call the value area, the value area. That's how you get the value area high. You get the value area low. You see this maroon here. I hope it's maroon on your screens. That maroon is what we call the mode or the point of control. That's where most of the trades, the volume took place. So 2090 half, it had the most volume. So if they traded, you know, 1 million contracts Friday or yesterday, okay, the majority of the trades took place here. See this longest line of letters? That's time. That just means that these traded here more times, but the volume was still greater here. And then the green is the mean, which is the 50% between the value area high and the value area low. For us, all our systems that we've developed have to do with, we look at mode placement and how much time it's taken place. So if you go back to when I was standing and filling orders in the pit and traded, you know, this is exactly the way markets move. They go up and down. They find equilibrium. They go down. They go up, and you'll find out that there's a price that it gravitates towards, where the buyers and the sellers meet each other, and sort of, you know, either a new value area is created, or I mean, a mode is created or not. So this for me, finding profile, because, and I think this is where I had the advantage of most people getting started. I traded for 25 years in a pit. I understand. I can go back and be looking at this chart and physically feel what this feels like, because when I was standing in the pit, it traded exactly the same way, right? So I can tell you right now, if I'd be standing in the pit right now and we've been moving up here like this and it's slow, I'd be like feeling like any second this market's got to retrace, right? Any second it's got to retrace. The problem is that you only get markets moving like this when I call these low volume rallies, and the only people participating are the people with the money, meaning the long-term money. So, you know, when they stop doing this, that's when we'll get, you know, some sort of retracement. I think that's an important thing that you have to understand. Did I answer that question, or is there any?
That's a good answer. We have a few more questions coming in.
All right.
Is point of control your stop loss when you're long above point of control?
Well, it depends where the markets move to. I mean, so I look at, so if I was using a trailing stop today, right, with point of control, no. Right today, here's my point of control now. I mean, here's my key area. I mean, if I got back inside value, I wouldn't like that. I would think that if I got back inside value, that the market's making it, you know, a correction, right? Now, see this area here, right here? When I take a look at all these bars, okay, so I'm starting to get a couple lower closes. You know, I try to go and look at a swing low, right here. Here would if the market went and got below here, which is like let me see, that would be 20.95 and a quarter. All right. If it got below there, I'd start getting suspicious to the fact that I thought that the market may be turning around. Okay. Now the market's just really slow. It's kind of hard to go there. So now we're getting two lower closes. Remember I was talking to you about these exhaustion dots up here. Okay. So let's go look at what this looks like on a profile basis. All right. So here's a profile. So when I tweet, I think the market has to backfill. I'm looking for the market to pull back here, 2094.75, because J would come and kind of meet I, and then we wouldn't have these single prints in here. Okay. All right. Now I'm going to tell you another thing, and this becomes a guessing game. You see how we have 5 letters going across here, all the way to G? G here. This is telling me that we have the possibility of the market retracing and going back in the later areas and going back and filling in these and making this 5 across. You see the low here? This to me is unfinished. All these single prints here are unfinished. That is not a healthy low. Okay? Okay, sort of like this one. This was not a healthy low. We went back and filled it in. All right? See this low right here, YZ? That was unfinished. Okay? So I'm looking for backfill, right? That's what we're looking for at this point. All right.
All right. We got another question here.
Go ahead.
How important are custom TOS scripts that you're using? Question. And these are 2 questions, 2 separate tweets. How much of your trading is driven by hard or fast rules versus your own intuition, etc., that you've perfected over the years?
All right. That's a good question, right? So a long time ago, people used to ask me, so this is the argument I have with computer programmers all the time. So if the computer doesn't trade and does not get, has a few losing trades in a row, what do programmers do? They optimize, right? Well, I got to tell you that I using intuition is not where it's at. The fact is that you have to look, and the stuff that we've developed, when I lose money, it's because I went with my feelings versus what I saw on the screen. I think a couple of weeks ago I put on This Is This, one of my favorite movies of all time, Deer Hunter. Robert De Niro's looking at the guy who played Fredo in The Godfather, and he's borrowing stuff from him, and he kept looking at with the bullet in his hand and saying, this is this, this is this, it's not something else, right? Same thing with this computer screen. This is telling me right now, look, this is telling me this is unfinished, right? We got IJ, okay? This is also telling me that we have to get a pullback, all right? So, maybe I could guess right, and, like right now, to me, the higher percentage trade would be to short it and stop myself out above 20,098 AM. But the market has no volume, right? I would be shorting the standard 2 deviation. My history is telling me, and what I've been watching, okay, is that the market should go back and trade in this area, back to VWAP, right? The problem is, look at our moving averages. They're still ascending. They're still ascending. All right? Look over here, this CCI. Okay? This, to me, all right, we got a spike high. All right? Sometimes I try to look for what we call a bullish or bearish divergence. It'd be a bullish divergence up here. All right? And so now the market has got these two lines here. I should probably explain that. These are the overbought lines. So we're overbought. The market's starting to go back in this area, okay? And so look, do I use my intuition? Yeah, but my intuition is now a completely different set of things. Before it used to be, I did all my technical analysis. I knew I wanted to get long, and I used to get my intuition from what I saw, the order flow coming into the pit, right? And now I'm looking at the tools that screen-based traders have developed. Okay, so we are getting a little bit of a pullback, right? So, I mean, this is telling me I think we're going to pull back to 20,094.75. I think that could be where we go. For sure, we're going to go here. You see these little grayed out areas? I think the market will fill in those. So are we entering on our second? It's 1240 right now, 1245, and I've got this in a descending. I'd be looking for this to cross here, okay? And that would be confirming the fact that it's going back. It's going to move down here and fill in this area. So, look, my intuition to answer the question is completely changed now because there are so many tools that we've developed. And I'm going to tell you something. This 5-minute pivot, I've lost more money trying to trade against that thing than trying to trade with it. So the stuff that Pat and I developed over the last 25 years is the things. I mean, there's times where we've done it and him and I both do it, and so you don't even know the process, right? So at night, I'm on the phone after I trade you guys. I go work out, I do whatever I have to do. Pat gets home. We're on the phone. We're on Skype, going over all our trades for the day, all the things they're doing, testing new things till probably 10 o'clock at night. So I had to replace my intuition with screen-based intuition. So that's why I love these things that have been developed. I know I'm rambling. I know.
From the same guy, Wall Street Frank said he really enjoys hearing about your experience on the floor. It provides great content.
Okay, what do you want to know? Want to know about the most exciting day on the floor? First day I walked on the floor. All right, I was supposed to go to law school, and I walked in and I said, oh my God, I can't believe people are making money with this organized chaos. And then I don't know if, look, if you guys, I've written a couple books. The joke is I've written more books than I read. Might be true, but I did graduate college. No, I did graduate college. I was supposed to go to law school. My father passed away, and I ended up, finding my way to the floor of the exchange. My mother was the legal secretary to Maury Kravitz. Maury Kravitz and Leo Melamed were law partners. So I had that going for me. And Jack Sander, actually, my mom introduced Jack to Maury and Leo and got him a job. When he came out of law school, he went to Notre Dame as a double domer. So I had some help when I ended up going to the floor of the exchange. I actually was playing handball with a guy. His name was Lou Matta. And Lou said, I want to trade gold futures. He goes, hey, why don't you come down to the floor? A young kid like you'll love it down there. So I did that, and I went over and I tapped Maury Kravitz on the shoulder when I got there, and he goes, and he had this really raspy voice. He was like 5'5" by 5'5". He had a raspy voice. He went, hey, what are you doing here, kid? And I said, I got a job as a runner. He goes, come back in 2 weeks. You're going to be my clerk. And that was it, man. It was awesome. And it afforded me an unbelievable lifestyle. I brought my brother down. Everybody I knew, I got friends from high school, cousins. It didn't matter. So as the S&P pit grew, I migrated to the S&P pit, and then our little section of the pit was known as Little Italy. And for a long time, I was known as Big Italy on the Squawk Box, and my brother was known as Little Italy on the Squawk Box. So, it was awesome. So it was an incredible place. And I kept saying to people, I hope this lasts for 5 years. I hope this lasts for 5 years. And it lasted for 25 years. So then I retired back in 2003, ventured into some other businesses, ended up coaching high school football with my sons, and coached for 6 years. And in my last 4 years, I won 4 state championships in a row. And my youngest son is now playing football. I've coached at Montini Catholic High School, and my youngest son is now on a full football scholarship at Western Illinois. He's going to be the next Julian Edelman. And then I got a daughter who's playing soccer at Northwestern, and she actually graduated this year going into the master's program for marketing. So, yeah, the days of the floor, let me tell you something. When the S&P first opened up, we had to go into the pit. There was a 15-minute time, sort of like a rule that guys had to go into the pit and trade with each other and scalp and scratch trades. That's a true story. We would go in there and we would just go half on 10. I go, sell you 10. And you go half on 10. I go, sell you 10. And there were no commissions. So what we were doing was creating sort of fictitious volume until other people decided they needed to get in there and trade it. And then once the institutions found out that it was such an easy tool for hedging, it just grew from there. And it went from doing 5,000 a day to 200,000 a day. And then we had the crash of '87, which was I was in Europe, and on Black Monday I was buying a watch in Piaget and sitting there, and I saw the ticker tape going back in Switzerland, and I'm looking at the ticker tape, and I said to the clerk in front of me, I go, hey, that ticker tape's broke. He goes, oh no, monsieur, the American stock market, it broke, it crashed. And said the Dow was down like, I think it was like 200 or 300 on that Monday. And I got back to my hotel, and my wife and my brother had left messages to get home because we thought the S&P pit was going to close, the world was coming to an end. So I ended up flying to London, getting on the Concorde and flying standby, going one way for 15G, 15,000 to go one way. Got back to Florida Tuesday afternoon, and my famous trade happened Thursday morning where I made $1.5 million in 20 seconds or something like that. I wrote it down on my card. I gave it to my clerk. She came back. I go, how much am I up? And she goes, you're up $1.3 million. I walked out of there, went into the washroom, and threw up in the washroom because I kept thinking this could have been the end of me. I bought a 100 lot or something, and you know what? I'll tell you what, it's been awesome. And the early days down there were like the Wild Wild West, and we just watched that pit grow from 100 guys to 500 guys. Sort of sad for me to see what happened to it, but when you take a look at now, when I left in '03, there were about 500,000 people worldwide who traded commodities. Now there's about 5 to 7 million people that trade commodities. So the computer actually has opened up the business. And the other thing that, it's funny though, because when I look at my demographics, when I look at the demographics of people that are following me, 93% are men. And I'm looking, thinking, why aren't more women doing this? So I don't know. You got more questions?
Another question. Can you show how you see when business is finished?
Business is finished.
That's what it says.
I don't understand that question. Oh, Casino Girl. Casino Girl, do you live in Las Vegas, I hope? All right, so let's open up this screen, right? Remember I said I think we're going to see a pullback, all right? Now, to me, this is unfinished. And to here, I want to see these single prints mean that it's so low volume that I want to see this pull back, because look, markets need to build bases. You can't just, it'd be like building a house from the top down and putting all the heavy stuff in before you get the foundation. And when I see stuff like this, Casino Girl, this is telling me that the market is reaching a top, all right? Plus we've developed, here's standard deviations from the VWAP, but these aren't ready to go yet. They're not ready to go. You see, we're getting, moving averages are going on an ascending, they're still ascending. So we've had a crossover here. Now, the key will be right here. If I can get this, I'll be looking here, right? So here's our CCI. We got to the overbought. This is starting to move sideways again still. We're still green, 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 green. If this crosses this center line, I got it in pink because I want to make sure I don't miss it. My eyes are getting bad in my old age. And that's what I'm looking for. So right now, I think we're probably, remember, and I probably shouldn't have said anything about taking this and put my stop above here, because you see this? It's not finished. So that means that's telling me that the market's still going to go higher. All right? And see this? This is telling me that it's got to be filled in. So what am I going to do here? Flip a coin? All right, let me flip a coin. If I flip a coin, we're gonna, and that's where people get themselves in trouble. We get what we call impulse trades. I think it's going to fill this before it fills that. Okay, so right now, because I'm out of the market, I'm not looking to get back in the market unless I see something like right here. Remember I told you? If I saw this market come back and start taking these lows out, especially these right here, I'm thinking it's going back below. If this CCI gets below here, starts crossing over the pink, all right? And then here's another thing with this CCI we developed. And so our goal is going to be able to let you guys come in our broadcast, and I'm going to broadcast probably 4 or 5 hours a day and have our screens up, okay? And you see how it goes from green down here, if you see my mouse, to gray, red, gray, back to green, and it stayed green, okay? Those are the things that, I look for, because that's talking to me about momentum, right? It's talking to me about momentum and what's going on. And so at this point, since we've had a 1,500 point move from the bottom, I'm like, you know what? I don't know how much more we're going to get. I don't think we're going to get too much more. Now, if I open up our site, Anthony, why don't you open up the site? Go down to Pat Tabbitt, go to our website, look at, go down, scroll down, and tell me what the average, so we put this stuff out on, all right, here, down a little more. All right, the average high from open to close has been 1,375 points, all right, in a 10-day period. And in a 20-day period, it's been 1,325. So if I take the opening print, and why don't you add this, 1,025, you got a calculator there? Okay, so if we go to the opening print, all right, so you wanted to ask, I'm asking about, okay, let's go to 830 back here, okay? That's 825, 830. All right, the opening print was 2089 and a quarter. 2089 and a quarter. Add 1,325 to that. 1,000.325 to that. No, we got to add. What was the all right, let's clear it. So we got 2089.25 plus 1 point, let's say basically 1.3. That would put the market at 2090.55. 2090.55, right? Is that right? So basically 21.
89 quarter.
I'm sorry?
2089 quarter.
Or 2089 quarter. No. That was the low of the. That was. Sorry, people. Hold on a second. I'm taking the opening print right here, which is 2089 and a quarter. 2089 and a quarter. Okay. Plus 1.3. So that would be basically 1,300 points. Would put us at
2090.
2090 half. All right, what's our, that doesn't make sense. It'd be 20, I'm not adding it, I'm sorry. I didn't add enough to it. Anyway, you know what I'm talking, 1,000 points from the opening. 1,300 points has been the average move over 10 days, over 20 days. So that's what, you're looking for. So now you ask me, so I do these things all the time. I do my projections and I say, okay, on a slow day like today, you'd think I'm going to go much higher than 1,300 points from the opening, right? So we've kind of reached our objective. I'm kind of like, if I didn't, and I didn't catch that up, I got to forget about thinking that. Now, once again, here's what we got going on here. Starting to come down. I'm going to see if it goes here. So get your calculators out and you can figure that out. It's adding 1,300 points from the opening range. So if it was 2089, let's say 2090 would put us at basically 1,000 points from the opening. I can't believe I'm having difficulty doing that. I do it every day. All right. Any other questions? We're running out of time. This hour went fast.
5 minutes.
What we got?
Casino girls not in Vegas.
You're not in Vegas? All right. Are you a girl? All right. I think I have. Somebody wrote something in there. I don't know what that is. Well, I'm going to stop sharing screen right here, and we'll go back to looking at my face. All right. All right. So our goal is eventually we are going to probably start doing live broadcast in the morning, and we will do live trading for certain segments of the day, like the opening for the first till 11 o'clock, and then I'll do some other things. Hopefully this has been helpful. You know, it's nice that it was actually pretty slow, and we could start talking about the charts and sharing the things with the charts. We're starting to see that CSI, I guess, let me share that screen again with you. All right. That's the one, right? Yeah, start sharing. Start sharing. Okay, so the CSI I've talked about, starting to cross over right here. All right, let's see what happens there. All right, that's starting to cross over. Let's look at what's going on with the profile. So remember I said for sure I thought it would go back to here, fill in those grays. And I think that the J period is going to go down to here, 2094.75. Okay, all right. And as you can see here, the moving averages are now starting to flatten out. This is turning red. All right. So I guess the stuff that we've kind of developed here with the, you know, the VWAP, the exhaustion areas, and this is the kind of stuff that you can't trade against this. Now, you know, I guess the play that I told you would have been the play, right? Because this ugly top, it could last for a day. This could last for a month. That ugly top. Okay, we never know. We just know that when they're put in. Let's take a look at the cash. Yeah, cash still hasn't taken out our pivot, our daily pivot in the SPX. So that's about it. Any more questions quickly?
No questions. Just some posts here.
All right, everybody enjoyed this, I hope, and you know, like I said, we're going to go back to. My goal is to eventually have a trading room that people can come in, and we are going to share our charts, share our ideas. We're going to have a trading forum where other people could share their ideas and so on. And the YouTube gives us an opportunity because we could there's enough bandwidth, and we could put 10,000 people on there. It wouldn't be a problem. And so that's what I'm looking forward to doing from at this point forward. And it's my nephew. Say hi, Ed.
Hi, everybody.
There's my. I used to be this good looking. I used to be that good looking. So that's about it. We've got basically 2 minutes left. What else could I tell you? Like I said, I was there for the beginning. You know, I tell people all the time. I started trading. Gold was $850 an ounce, and interest rates were at 18%. 18%. Now we're in a 0% environment for interest rates. It's incredible. It's mind-boggling to me that we're at a 0% interest rate. And unfortunately, and another thing about my demographics, I take a look at it, it's about guys my age from 45 and older. I'm not 45, I'm 57. And so a bunch of people sitting around, and a lot of baby boomers, if they can learn what they're doing, and you don't have to take big risk, you can be out of the market. You know, there are so many markets to trade now. And then, you know, the nice thing about the stuff that we do, it's just an overlay. It basically fits over any market that you're trading. So, you know, I hope that this has been helpful. And when we perfect this technology and having these rooms, we're going to actually have a live trading room, and you guys will be trading with me, and listen to what's going on, and you can make your own trades, and you're going to see me when I get mad. You're going to see me when I throw my computer monitors out the window. So this is, all your input will help us build a better show. So just let us know when you're ready. I think that's it. I think we're done. So everyone, that was nice. Talk to you later. Bye.